Hello and welcome to this session in which we will discuss net operating loss for a corporation, discussing this from a tax strategy, and specifically the tax strategy is timing. When can you take and when do you take NOL, net operating loss? The first thing I'm going to do is go back and real quick review what is an NOL so we understand what is an NOL and how do we utilize NOL in tax strategy, specifically timing. Because in tax strategy, we could have timing, we could have income shifting. NOL falls under the timing. So, an NOL occurs when a company's allowable deduction exceeds their taxable income. So when does an NOL gets created? For example, in a particular year, year one, we have revenues of 50,000, expenses of, for the sake of illustration, of 70,000. And what happened in that year? We have an NOL of 20,000. This is what an NOL is, net operating loss. Now, for a corporation, here's what's going to happen. The corporation, from a law perspective, they believe it's a continuation. So if your corporation operating in year one, year two is a continuation of year one. So if in year one, let's assume you had gains. Let's assume gains mean, let's go with revenues first. Let's assume you had revenues of 100,000 and let's say expenses of 70,000 again. Now you have a gain of 30,000. Now, since you had a loss last year, they allow you to bring your loss from last year to reduce your current taxable income. Because for a corporation, what they believe, year two is a continuation of year one. Now, unfortunately for individual, that's not how it works. But for corporation, it's a continuation. So I just want you to understand the basic idea of the NOL. So when you have an NOL, this means the company has incurred more expenses than it earned in revenue, leading to negative taxable income. So the provision in the law allows corporation to use those losses to offset taxable income in other years, providing them a form of tax relief. Again, the assumption is the corporation is a continuation. Now, for example, if you don't have a tax bill in 1 year, as a person, and the next year you have a high tax bill, you cannot take your last year no tax bill. You cannot offset them against each other. But for a corporation, they can offset taxable income from year to year. Taxable losses against taxable income. So this is what we're going to be discussing, specifically NOL carried forward and NOL carried backward. Let's go ahead and get started. Before we proceed any further, I have a public announcement about my company, farhatlectures.com. Farhat Accounting Lectures is a supplemental educational tool that's going to help you with your CPA exam preparation as well as your accounting courses. My CPA material is aligned with your CPA review course such as Becker, Roger, Wiley, Gleam, Miles. My accounting courses are aligned with your accounting courses broken down by chapter and topics. My resources consist of lectures, multiple choice questions, true-false questions, as well as exercises. Go ahead, start your free trial today. What is NOL carried forward? Well, NOL is a deduction. That's the first thing we want to know before we look at forward. What is a deduction? Deduction means it reduces your taxable income. It's not a direct tax credit, because a tax credit, if you have a $1 of tax credit, if you have a credit, it's going to reduce your taxes by $1. Okay, so dollar for $1. In a deduction, if you have $1 in a deduction, if you have $1 in a deduction, how much is your savings? Well, depending on your tax rate. So your tax rate is 21%, your savings are 21 cents. So the deduction is worth less than a credit, and an NOL is a deduction. It's basically an expense that you could not take in the prior year. So when the NOL is carried forward to the current tax year, they serve a valuable tool for reducing your pre-NOL taxable income. So it's going to think of it as expenses that you did not use, that you incurred in prior years, you could not use, they created an NOL. Well, those expenses, they carried to future years. So what's going to happen, it's going to reduce your taxable income, and as a result, lowers your total tax liability for that year, leading to what? Leading to more cash in your pocket for the corporation. So you have to pay less in taxes. So you can carry the NOL forward in future years. And we're going to see exactly how many years, because the law changes, so you have to understand. We're going to look at a separate slide for that. You could also, and under certain circumstances, depending on the year, you can carry the NOL backward. For NOL that are carried back, The process involved applying these losses to previous tax year, well, and specifically starting with the earliest year possible under the law. So depending on how many years you can go back, you start with the earliest and start to use your NOL. What does that mean? It means you go back, you change your taxes, you'd say, I incur the loss in year 5, I'm gonna go back in year 4 and 3 and claim a deduction, which means reduce my taxable income and get a refund. So to leverage the benefit of a carryback, corporation must file an amended tax return. So you will go back, file a tax return for those years and say, I have additional deduction now, give me back, reduce my taxes and issue me a refund. And by doing so, you reduce your taxable income for those earlier years, which turns lower income tax previously calculated for those periods, because you know you have additional expenses. So after the IRS process those amended return, the corporation would receive a refund, assuming you want a refund or you want to apply the refund to your taxes, providing a cash inflow that reflects the decrease in tax liability from the application of NOL carryback. Now, the reason I did not mention how many years you can carry it forward, how many years you can carry it backward, because the law have changed over the years. So that's why now I'm going to go in and discuss a little bit more in details the different NOL rules. Any NOL that you are told was generated before 2018, before the Tax Cuts and Jobs Act, you can carry that NOL 20 years forward, so from 20 years forward, and it could apply against 100% of your taxable income. It could reduce your taxable income to 0, and those NOL, you can carry them back 2 years. And also the carryback can be used 100% against your taxable income. So any NOL, so you have to be careful what year it's given. Any NOL, it used to be called 220. You can go back 2 years, go forward 20 years, and it can reduce your taxable income down to 0. Any NOL that was created between 2018 to 2020, you can carry it forward indefinitely. So rather than 20 years, there's an improvement here. You can carry it forward indefinitely. And any taxable income before 2020, 18, 19, and 20, it can also reduce your taxable income by 100%. If NOL between 2018 and 2020 is not used before 2020, it means it's used 2021 and future years, now it's limited to reducing your taxable income by 80%. So we have to be careful here. NOL generated 2018 to 2020, if they are used between 2018 and 2020, if the NOL was used, it can reduce your taxable income by 100%. If those NOL, they could not be used because you did not have any taxable income, it's moved to the 2021, starting 2021, you can only reduce your taxable income by 80%. Now also 2018 and 2020, you can carry them back 5 years. There's a carryback feature, and they can be used 100% against your taxable income. If those don't make sense, don't worry, we'll talk about them. But really, I don't want you to be confused. Basically, think about anything after 2018 after 2018, it's going to be 80% of TI, because most likely they're not going to tell you you have a taxable income in years that don't exist anymore, because they're going to ask you about years 2020 and forward. In 2020 and forward, it's 80%. After 2020, any NOL can be carried forward, but you are limited to 80% of taxable income. You can no longer carry it backward. Simply put, after 2020, NOL can reduce your taxable income up to 80%. Cannot carry it back. This is what you need to know. And any NOL before 2018, 100% of taxable income, it has a carryback of 2 years. Let's take a look at this example to illustrate the concept. Green Tech Innovations, a Calendar C corporation, has 2 NOL carry over from prior years as follows. We have an NOL from 2016 for $50,000, an NOL from 2023 for $80,000. So before we proceed, this NOL from 2016, it could reduce your taxable income up to 100%. After 2020, up to 80%. Just you want to keep that in mind, those years. The cutoff is 2018. For the current year, let's assume 2024, we have a taxable income of 120 before applying any NOL deduction. Now, what are we going to do? Well, we're going to use the 2016. The NOL from 2016, it's going to take your 120,000 of taxable income. We're going to use the 2016, and we can use all of it to reduce your taxable income down to 0 if we have it, but we don't. So it's not limited to anything. You're going to be left with 70,000 of taxable income. What are we going to do next? We're going to use the 2023 NOL. Now, what do we have to be aware of 2023 NOL is you can only use it to reduce your taxable income by 80%. So if we take 70,000 taxable income times 80%, it's 56,000. It doesn't matter how much NOL you have. You have 80,000, but you can only reduce your taxable income by 56. 56,000. It means you still have taxable income, because if you 70,000 minus 56, you still have taxable income of 14,000, but you still have of the 80,000 NOL, because you used up 80,000, you used up only 56, you still have the remaining. So 50,000 minus 56, you have unused NOL. But you would love to do what? You would love to take this 80,000 if you were able to and wipe out the whole 70,000. You could not wipe the whole thing out, because the new rules is you are limited to 80%, right? I mean, you would love that this 80% was like 2016, and you will have 0 taxable income and you will have unused 10,000. Okay, so the resulting is this. The taxable income for this year would, as I mentioned, it will be 14,000, because 70, you could only use 56 of the NOL from 2023. So the total NOL deduction for the current year is 50,000 from 2016, 56,000 from 2023. So the total is 106. And NOL carried into the future, the 2016 is gone. 2016 NOL is used up, it's gone. What's left is 24,000, 80,000 of the original amount minus the amount that we used for 2024. We would love to wipe the whole thing out. So the 2016 is gone. In the 2023, we still have 24,000 to be used in future years indefinitely. So the remaining 24, for remaining 2024, your taxable income is 14, and you'll pay 21% on those taxable income. Let's take a look at this multiple choice questions from farhatlectures.com. ACE Corporation, a C corporation with $100,000 taxable income for the current year, has an NOL carryover of 40,000 from 2017. Be careful about the year. It matters for NOL. 2017 means before 2018. It means this amount can reduce your taxable income by 100%. And 70,000 from 2022. Well, the 70,000 for any year used could only reduce your income up to 80%. How much is ACE taxable income after applying the NOL? Well, let's see. We have 100,000 of taxable income. The first thing we're going to do, we're going to take the NOL carryover from the year 2017, and this can be used 100%. It's going to bring down your taxable income to 60,000. Now, from the 60,000 now, we're going to be using the NOL from 2022. But since the NOL is from 2022, well, you are limited to how much? 80%. So 80% times 60,000, if my math is right, it's equal to 48,000. Well, what does that mean? It means you have, we're going to use, of the you have 60,000 of taxable income. You can reduce it by 48,000. You are left with 12, because we have plenty. We have 70. Of that 70, we can only utilize 48,000. So after we utilize the 48,000, you still have 12,000 in taxable income. 12,000 in taxable income. And the answer is asking how much is the taxable income. The taxable income is 12,000. And after we take 70,000 minus 48,000, you still have NOL to carry forward of 22,000. This is the NOL carried forward. So be careful whether they're asking you about the NOL to be carried forward or they're asking you taxable income. They're asking about taxable income. I mean, to make it trickier, I would put, an answer of 22,000. I did not. But this will give you like a potential answer, and be careful whether you're asking for the taxable income or NOL. What should you do now? You want to go to Farhat Lectures, look at additional MCQs. That's going to help you study for your CPA exam, enrolled agent, accounting courses, tax courses, professional certification. Invest in yourself. Good luck, study hard, and of course, stay safe.